Well, if you've been around the trading world for some time, you've probably heard about momentum trading. But what is it? And more importantly, how do you make money doing it? Well, this week I'm going to show you some tricks on how to do just that. Then I'll provide my analysis of the markets. We'll figure out where stocks, commodities, currencies are likely headed in the near term. And then finally, I'll look at the day trade of the week. So the idea behind momentum trading is to buy stocks that are in upward trends. What it not is, however, is chasing stocks when they run away from their trend lines. It's very important to buy strong stocks when they are on sale. And we do that by waiting for them to pull back. It's inevitable that these strong stocks will have some pullbacks along the way. I'm going to show you an example in just a moment of how these strong stocks that can be moving up for weeks, months, even years will always have little pullbacks along the way. And those pullbacks can be used for your entry point, but also to control risk. You see, we're buying stocks that the market loves, but we're buying them after a round of profit taking. It's inevitable when stocks are going up that the crowd eventually says, hey, we're going to take some profits here. And you see a stock pull back for a couple of days, maybe even a couple of weeks. And when they do that, they set us up for an opportunity to buy them on the cheap when they break their pullback. So let's use an example of Apple Computer to define this. So what we can see here first is that this stock is in a very well-defined upward trend. So it's the kind of stock that we want to play momentum on. We're not interested in it when it's like this. We want it to have well-defined upward trends. And you'll notice that in this upward trend, there's lots of pullbacks along the way. That's what we're going to use for our entry point. Now, when I'm doing momentum trading, I use the daily chart to tell me what to do. And I use the shorter term chart, perhaps the 60-minute, the 30-minute, or even the 15-minute chart to tell me when to do it. So we're going to jump now to the 30-day, 60-minute chart of Apple. We know that the stock has strong upward momentum on the daily time frame. And so we're going to watch for pullbacks on the shorter term time frame, but more importantly, we're going to look for breaks of pullbacks. So looking here at Apple, we can see that there was a pullback here and a break of the pullback. There was a pullback here and a break of the pullback. There was a pullback through here and a break of the pullback. Now you could also argue that there was a pullback there and a break of the pullback. Okay, each one of these will have a buy point and you put your stop loss just below the low of the pullback. So you buy here and you put your stop there. Stock trades up in an upward move and you sell when the upward move is broken. Then you have another pullback, break of the pullback, stop goes here, entry is there, and you hold it as long as the stock is in the upward trend. We get a pullback here, we break the pullback, stop goes there. In this case, you're getting stopped out right there for a loss. No problem, that's going to happen. Don't think that you're going to be right all of the time. But you get another chance when you can draw a line across the peaks, and when you break the pullback, put your stop here, entry here, and you would still be in this trade sitting right there. Now this stock has lost some of its momentum over the last 2 weeks. You can see that the longer term upward trend was actually broken here, and that set us up for this more quiet trading. But eventually it's going to break out of this range, most likely anyway, and then it can make that next move to the upside. So the key to momentum trading is buying stocks when they break the pullback. Use the low of the pullback to define your stop loss point. Recognize that you're not going to be right all of the time. You're playing a numbers game. So when you take a loss, that's a -1 in terms of risk, and you're trying to earn some multiple of risk to the upside. Even if you're right only 50% of the time, but your average profit can be double the size of your average loss, then you can actually do quite well with this. All right, let's get into this week's Stockscores market analysis, and we'll jump over to the Stockscores website, take a look at the S&P 500 first. Here's SPY. And there we can see on the 1 month time frame, the trend is up. So it's a bullish trend for the S&P 500. On the 3-year chart, it's also a bullish trend. Very simply, who's in control? If the bottoms are rising, the buyers are in control. We are a little bit extended to the upside. We may get a little pullback soon, but we don't have any resistance until we get up into there. Next chart I want to look at is the small cap sector for the US, IWM. And there again, we go to the 1 month chart. And there we also have a little bit of upward momentum, although it's not quite as strong as on the S&P. You can see that we've been sort of sideways the last couple of weeks, but the trend is still up in general. On the 3-year chart, we're not really in an upward trend. We've been stuck in this sideways range. So unlike the large cap stocks that make up the S&P 500, the small cap stocks have been in this sideways range. Now they've been strong for the last couple of months, but they're bumping up against this resistance zone where it's very likely that we'll get a little bit of a pullback. Now that pullback, if it happens, could be motivated by a rise in interest rates, because these small cap stocks are much more sensitive to interest rate raises than the large cap stocks have been. So we'll have to keep an eye on that, and that'll come up important in just a moment. All right, let's take a look at the Canadian market, T.XIU, and we'll look at the 1 month time frame. Momentum is up. 3-year time frame, again, like the IWM, like the Russell small cap sector, it's stuck in this sideways range. We want to see it break out of this, but even if it does, your upside is limited by that resistance zone right there. Let's jump over to commodities. GLD is our symbol for gold. Looking at the 1 month time frame, it's choppy. I would call this a neutral chart. It had a little bit of an upward move and then it kind of broke down this past week. The general trend for the last month is sideways. On the 3-year chart, it's had some good upward momentum, but it's really stalled the last 4 months. And so I think upside is pretty limited. There's your resistance. You've kind of broken the upward trend line. So I think at best, this market is going to go sideways in the weeks and months ahead. Moving along to oil, USO is the symbol that we can use for oil. It's an ETF based on oil. The 1 month time frame, good upward momentum. And we're starting to see energy stocks showing decent charts. If you've been watching the energy sector, you'll know that we're starting to see a turn in some of the energy names. So I think this is a place to look for opportunity. Now the 3-year chart is still turning. It's not quite there yet. You can see the trend is starting to turn. We have broken the downward trend line from a slight rising bottom. My concern is that there's resistance right here. This price peak has held up numerous times over the last 6 or 7 months. And so we could get stuck here next week. But ultimately, if we can break through this, then I think oil continues upward and perhaps moving up towards that resistance at $90 on USO. All right, let's move along to the US dollar, which is an important factor for commodity prices. And there we can see the general trend is down, although it's got lots of volatility to the downside. Now we're sort of hitting a point where we might reverse and move lower, which would help the price of oil move up, which would help perhaps even gold move up. And that would maybe be motivated by some weakness in interest rates. We're going to talk about that next, actually in just a moment. I just want to look at Bitcoin first. Here's GBTC. This is our Bitcoin chart. Daily time frame in an upward trend. You can see though that we're starting to see a little bit of weakness. I think Bitcoin may pull back in the short term, come down to this trend line. Now, if we look at the 1 month time frame, that's where you can see this little bit of a breakdown happening from some falling tops. Still has support here, so it's not the end of the world, but I think that there's a decent chance we'll see that make more of a pullback. On the 3-year time frame, however, the upward trend is still there, and so although we may get a pullback in the next few weeks, I think it's still slowly recovering its upward momentum. Now the final chart we'll look at is TLT, which is the chart of the US Treasury bond market. And you can see that treasuries have been moving down with a downward bias over the last 4 months, which means interest rates have been moving with a slight upward bias over the last 4 months. So if this breaks down, that could mean interest rates rise. A little bit of a conflict here because we saw that the US dollar was also weak, and usually they move opposite one another. So it's a difficult situation to call, but I would say be slightly cautious on interest rates. I do think that there is a chance that the bond market goes down, which means interest rates rise. And again, these are interest rates in the bond market, not what the Fed does. The bond market tends to predict what the Federal Reserve is going to do in the US, and it's pointing towards maybe a little bit of a drop in the bond market in the near term. So that's something to keep an eye on. Not really clear cut yet, but we'll keep an eye on that. All right, so let's take a look at my ratings then. I've color coded them this week. So US large cap stocks bullish on both time frames. Small caps long-term bullish. Actually, it should be the opposite way. Long-term neutral, short-term bullish. I've put that in there backwards. Canadian stocks, same thing. It should be long-term neutral, short-term bullish. I'll try to get that fixed for next week. Gold neutral on both time frames. Oil should be short-term bullish, which it is, and long-term neutral. We're just starting to turn. US dollar long-term neutral, short-term bearish with that 1 month chart having some downward momentum. Bitcoin long-term bullish, short-term neutral, and interest rates neutral on both time frames, but at a point where it could start to turn. All right, let's take a look at our day trade of the week. This is an example of stocks that we trade in my Active Live service. You can learn more about Active Live if you go to Stockscores.com, my website. It's essentially a service where we have algorithms running throughout the day along with the knowledge that I teach on how to trade those algorithms. And this is a stock that we had on our watch list on Friday. Why? Because it's trading abnormal volume. That's my first criteria, not the only criteria, but an important one. You had the first move up and there's the pullback. So much like we trade momentum in the long term, we can do the same thing in the short term. There's your break of your pullback, or maybe even this one a little more clear cut. You can see that the algorithm, the computer actually draws these lines in for you. I didn't draw those. That's my indicator for trend lines. So there we have another break, and then we have another break right here, and so on and so forth. And so these are all entry points here, 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 and then ultimately the upward trend line broken in there. That would be our sell signal. And these are some of the things that you can learn in my Active Live course at Stockscores.com. And of course, we do the Active Live service every day, trading day of the month. And a great way to learn, but also a great way to get some ideas on where to find the action in the market. We let the computer do most of the work, and then I give you the knowledge on how to put that knowledge to work. Well, hope that you've enjoyed this week's Stockscores Market Minutes. Do you like trading momentum, or do you like to buy stocks that are on the cheap? Tell me what your thoughts are in this week's comments. Leave a like if you enjoyed this week's video, and most importantly, trade well.